What's up, everyone? Dylan here. I wanted to hop on and do another episode of the weekly analysis video. I apologize for the late upload. I had to run a few errands, but I figured I'd squeeze this video in. So, as always, I'm going to talk about recent price action, how I've been analyzing the recent price action, and going forward, I'll talk about a few different areas of interest that I am looking to put money behind. We'll hop right into it. So, coming off of the last video, you could see that we did, in fact, close two monthly green candles in a row. So, that's a small victory for the bulls, as it has been the first time all year that has been the case. So the last time that happened was, back in the summer of 2021. So it's been a very long time, where two green consecutive monthly candles happen. So I had a member in the last video ask, now that has happened, are you still looking to take the short position up at 4130 to 4150 area? And the answer is yes, because remember, one thing that I try to do is think in the opposite perspective compared to the average retail investor. So I'm speculating that now that you have the two consecutive green monthly candles, a retail trader will look at that and say, okay, higher prices are imminent now that the bulls have showed control for two consecutive months. So basically, I look for different pieces of context where I'm piecing different pieces of the puzzle together and coming up with a thesis. So ideally, when I look for an area to short, I want to see different pieces of what seem to be bullish, right? So that the retail trader will chase those longs, and I'm entering on the opposite end, where they least expect. So yeah, I'm still interested in the short position, as I've been saying, and I'm going to go over that right now. So I just wanted to go over exactly where I'm looking to short. I've been going over this for a while, but there seems to be some confusion still. So as you can see, price hit this long-term downtrend resistance line. Okay, I've been looking at this level and I've been posting this trend line for months in the Discord. So we finally revisited it for the first time since this past summer. So a lot of you guys, and I've seen a lot of other people take this short. I did not. Full transparency, I did not short this. Do I wish I did in hindsight? Yeah, I guess so. But I had a predetermined plan to short at 690 minute supply, which was at 4137.5, and it did not hit there. So with that said, I did not partake in this short setup. So ideally, as noted, I would have liked to see a strong rally through up above this trend line, right? And that what that would have done is attract retail longs that missed the initial breakout, right? I want to see retail chase the move higher into a nice shorting area where I will, be on the opposite end. So just quick, I'm going to draw that 690 minute supply. All right. Draw a rectangle. Okay. So as you can see, like I said, never got there. So at this moment, I am still interested in shorting this area. Why? Like I said, it's got supply up there. 690 minutes seems to work very, very well based on my own due diligence, right? What that is ES is open for 23 hours out of the day, right? It's closed from 5 p.m. to 6 p.m. So all of the other hours, Monday to Friday, it is open. So you take the 23 hours and divide it by 2, you get 690 minutes, which is 11 and a half hours. And like I said, based on my own due diligence and back testing, the 690-minute time frame tends to work very, very well. So that's the first reason. The second reason is it would be a bullish indication for most retail traders. And like I said, they're going to rush into longs up here, chasing the move because they're saying to themselves, oh my gosh, we just broke above this macro trend line. We're going to see 4,200, 4,300 right around the corner. So that's another reason I like the fact that it looks bullish. It looks bullish to the average retail trader. Okay. And then the third reason is the fact that the 50% retracement lines up exactly with that zone. So if you take a retracement from the 52-week highs and the 52-week lows, it's very significant using those two reference points, right? Look where that 50% lines up with. Right in that zone. All right. Coincidence? I don't know. But I know that that's a very, very key confluence area where algorithms will be tied to that area. So I am all for shorting in that area. Okay. So yes, we've had 2 consecutive monthly green candles. And yes, the price of ES will have to break above this macro downtrend line, but that's right up my alley, and I am still looking to short there. So if any of you guys in the Discord say, hey, are you still looking to short at that area? I'm going to say, look at 7 minutes into my weekly analysis video that was posted on December 5th, and you be the judge of that. So with that said, that's the big one that I'm interested in. To the downside, right now, what a lot of retail traders are thinking is that we're going to see new lows. Why? Because there was a failed breakout at that downtrend resistance. And I would agree with them. However, I do believe as of right now that we still will get up to that 690-minute supply. Would I be shocked to see price continue rolling over down, towards the 3,800 region and below? Slightly. I don't know if I would be totally shocked, but I do still expect price to gravitate towards that 4,150 before having the nice drop that I am anticipating. So technically speaking, bulls are slightly in control, considering they're still holding above this downtrend resistance. Okay, so there's a few different ways to draw it. You could latch the line onto that low, or I've seen a few people latch it onto this low, or you could latch it onto this low over here. So, whatever way looks best on your end, you could see that price is above all 3 lines. So whatever floats your boat, do what you got to do. But I'm going to stick with this one. So as you can see, stemming back from the 52-week lows back in October, this trend line has had 1, 2, 3, 4 tests, and then it just missed it today. As noted in the Discord, it missed it by like a point today. So as long as that trend line holds, technically the bulls still have slight control because they are making higher lows, right? Ever since mid-October, the 52-week lows down there, each, sizable pullback has been at a higher low from the previous. So, so you have this downtrend resistance, but you also have this, decent looking demand zone. The reason I say decent is, That's a very, very, very nice rally candle, but technically there was no upside continuation after that rally candle closed. But it's still good, don't get me wrong. So technically, this could be a pretty good play as well, where price breaches below that downtrend resistance or uptrend resistance, or wow, uptrend support line, right? That key macro uptrend support, right? If price breaches below this, a lot of people are going to, rush into the shorts, right? Short side. Little do they know there's some demand like 20 points below. So that could be a nice area to get long, considering, let's just say price breaches below that support line, comes right into this demand, right? People chase on the short side, and then you get, a nice short squeeze to the upside. So I could see that happening for sure. In terms of economic events, the two this week are, what was it? I think PPI. Let me see. You have, PPI this Friday at 8:30 a.m., and then you have the University of Michigan Consumer Sentiment at 10 a.m., both on this Friday. Those are decent. I'll definitely keep an eye on those, but they're not huge in my opinion. What is huge is next week, right? Next week, you have CPI on Tuesday, right? You have the main print and the core CPI coming out on Tuesday of next week. And you have the FOMC the day after. So two of the biggest economic catalysts that we've seen this year, right? The CPI and FOMC, being that they, show inflation data, are next week. And that's 2 consecutive days in a row. So with that said, I am expecting a massive move. Best case scenario would be, maybe a nice move into this and then a move up to that 4150 area. Do I expect that to happen this week? I do not. If anything, it'll happen next week on those economic prints. So essentially, all you need to know is that Dylan O'Neill is looking to short that 690-minute supply, because I've been asked numerous times. I've never said that I wasn't interested, right? Ever since I told you guys I was interested, I haven't said, hey, by the way, I'm not interested anymore. So please, don't ask, hey, are you still interested? If I tell you guys that I'm not interested anymore, then yes, then you could ask why, hey, why is that the case? But don't say, hey, are you still interested? I haven't told you guys I wasn't interested. So, if I tell you guys that I'm looking to put my money behind, where my mouth is, that's the case, right? And I'll always tell you if I'm not interested before it happens, okay? So we have this area. We also have, this area here too, using this most recent macro high. You have the 50% retracement, which already has a test. If this demand zone does not hold, the next area is that 39.15-ish area. The bulls don't want it seeing price go below that. If price gets below 3,900, then I wouldn't be surprised to see a test of like 37.70. And I've already talked about that in previous videos. But essentially, worst case scenario on the bull side, they don't want to lose support at 3,900, which would be a breach below the support line, the demand zone, the 50% retracement, and a psychological 3,900 whole number. Okay, that would be no bueno for the bulls, right? So worst case scenario, the max risk 100 points from here, And then to the upside, I would like to see that 4150 area. So one thing that I wanted to note before I end this video, the reason why I do believe that the 690-minute supply will produce a sizable move. Obviously, we have the technicals, right? We have technical confluence in that area, which is the basis of my system. But as you guys know, I also like the fundamental reasonings. When you have both technical and fundamental thesis behind your trades. That's not the case for every single one of my trades. However, the ones that do have both fundamental and technical reasonings seem to work the best and produce the largest results. So one thing that I've been reading about, now that the earnings season is coming to an end with the year end in right at the other side of the tunnel, corporate earnings have been rolling over, right? So earnings for this last quarter haven't been good. In plain English, the easiest way for me to say it is they have not been as good as expectations. Why haven't they been good? A ton of different reasons, right? We've had the supply chain reasons. We've had, higher interest rates. The list goes on and on and on. So considering corporate earnings are rolling over, what that is doing is it's decreasing the fair value outlook. And this is a topic that I've talked about in a previous, video. So you could find the number. It's public information. I personally get it from a newsletter. It's like an institutional newsletter. However, it's out there. You don't need to have an institutional newsletter to have this information. Basically, what it is it shows the fair value on the S&P 500 based on a few different factors, right? Corporate earnings, yields, EPS, a few different numbers go into calculating what the fair value of the S&P 500 as a whole is, okay? So with corporate earnings rolling over, they are decreasing the fair value outlook, okay? Essentially, a stagnant economy, considering rates have been increasing at the quickest and most aggressive, levels since, decades ago. So a stagnant economy and falling earnings do not create a good environment for stocks, in plain English. Okay, so, the fair value right now is around these levels. But once we get into the new year, right? We're in the last month of the year, and where the corporate earnings calculations are coming out. You have some estimates that the fair value is going to drop from this area down towards, on the pessimistic side, people are calling for 3,700 as fair value. So essentially what I'm saying is the higher price gets, right? Say price comes up into this 4150 area, technically it's higher than what the fair value of the S&P 500 should be on paper. So what that does is it shows institutions that this could be an area to sell into and take profit. Okay? So that's kind of, a nice little fundamental lesson from Dylan O'Neill. So that's basically all I have to say. So yes, I have technicals up there and I have fundamental thesis up there as well. So like I said, worst case scenario on the bull side, you do not want to see price getting below 3,900. I doubt it gets down there before next week, but that would be no bueno. And then to the upside, I'm looking at that 41.35 to like 41.75 area. I mean, if it went above that, I would struggle holding because that's just a little too much risk for me. But that's where I stand at this very moment. And with that said, peace.